Ever thought about how some folks hit it big in the stock market? Today, we're jumping into the stories of regular people who became stock market heroes. Get set for a ride filled with big wins, tough times, and lessons you can't miss. This is Stock Market Success Stories, the stories of people making it big in stocks. Jesse Lauriston Livermore was like a money magician in the stock market world. He did some amazing tricks, making a ton of money and then losing it all. One of his coolest tricks was when he guessed the 1929 market crash and turned his fortune into $100 million. But sadly, he couldn't keep the magic going, and by 1934, he lost everything. Life got really tough for him with family problems and stress, and it got so heavy that he took his own life in 1940. Livermore's money journey shows that sometimes the stock market is like a wild roller coaster. You've probably heard about George Soros. His name is like a big deal in the money world, but Soros is more than just a money guy. He's also a survivor of a really tough time in history called the Holocaust, and he's big on giving back through philanthropy. Now let's talk about this legendary move he pulled off in 1992. Soros decides to do something pretty bold with his money. He short sells a whopping $10 billion worth of pounds, which is like betting that the value of pounds will go down. And guess what? He was right. The value of pounds drops, and Soros makes a cool $1 billion profit. That's why people call him the man who broke the Bank of England. It's like winning the jackpot in the money world, and Soros pulled it off like a true money master. Born in San Jose, California on June 19, 1971, Burry's life took a challenging turn when he lost vision in his left eye to a rare cancer at the age of 2. Despite this setback, Burry channeled his determination into becoming a medical professional. While pursuing a degree in economics in California and later earning an MD from medical school, Burry discovered a passion for investing. Balancing his medical duties during the day with his investment pursuits at night, he made a pivotal decision during his residency at Stanford University. In the third year, he chose to leave Stanford to fully focus on building a career in investing. In 2000, Burry founded his hedge fund, Scion Capital, and it was in 2007 that his contrarian mindset led to a groundbreaking prediction. Seeing signs of trouble in the housing market, Burry foresaw a crisis and began shorting collateralized debt obligations, CDOs, a risky move, betting against the market trend. When the housing bubble burst, Burry's foresight paid off, earning him a personal profit of $100 million and an astounding $700 million for his investors. The fame of Burry's foresight grew even more with the release of the movie The Big Short, which depicted his successful bets against the housing market. This earned him the moniker The Big Short Investor. Burry's investment philosophy is rooted in a contrarian mindset, meaning he likes to go against the crowd, challenging commonly held beliefs. Imagine starting with just $1,600 and turning it into a whopping $200 million. That's the incredible story of Richard J. Dennis, known as the Prince of the Pit. Born in 1949, Dennis left an indelible mark on the trading world, particularly in the fast-paced realm of Chicago-based commodities trading. Dennis wasn't just a regular trader, he was a speculator extraordinaire. Over a decade, he reportedly accumulated a fortune of $200 million through his sharp instincts and strategic moves in the commodities market. What makes this story even more captivating is the modest sum he started with, a mere $1,600. One of the most intriguing chapters in Dennis's trading legacy is the turtle trading experiment. Alongside his partner, William Eckhart, he co-created this mythical experiment. The idea was to teach a group of individuals, known as the Turtles, his trading strategies. Even though he began small, Jones had a knack for making good investment choices, and that set him on a path to a fantastic career. One of his coolest moments was in 1987, when he saw a big financial crash coming. Jones made a smart move by betting against the market, and when the crash happened, known as Black Monday, he made around $100 million from shorting stocks after predicting it on a television documentary. This early win marked the beginning of a successful journey for him. His company has been growing steadily, making good returns every year. Today, Jones is a big deal in finance. Forbes says his company handles a huge $7 billion in money, and he himself is worth an impressive $5.1 billion. He invests in different parts of the world like the US, Australia, Hong Kong, Europe, Japan, UK, and emerging Asian markets. His company has offices in many of these places, helping them make smart moves in the money world. Paulson, at the helm of the hedge fund Paulson & Co., became a household name by making billions of dollars using a clever strategy involving credit default swaps. In 2007, Paulson ingeniously used credit default swaps to essentially bet against the U.S. subprime mortgage lending market. This means he predicted that the market for risky home loans was going to tumble, and he made a bet that paid off big time. His strategic move earned him billions and catapulted him to the top echelons of the financial elite. Paulson's fortune, estimated at a whopping $4.4 billion, was largely built by helping other people grow their wealth. He had a talent for making smart financial moves that benefited not only himself, but also the investors in his hedge fund. Nicholas Leeson was born in 1967 and is known for being the rogue trader responsible for the dramatic collapse of the UK-based Barings Bank. Leeson's journey, marked by highs and lows, serves as a cautionary tale in the world of finance. Starting with a modest, pencil-pushing job at a local bank, he steadily climbed the financial ladder. His journey took him to prestigious institutions like Morgan Stanley before landing a position at Barings Bank. The turning point came when Leeson, as a derivatives trader, made a series of high-risk and unauthorized trades that resulted in massive losses for Barings Bank, amounting to about $1.4 billion. This catastrophic event led to the bank's collapse, sending shockwaves through the financial world. In the aftermath, Leeson faced legal consequences and served 4 years in a Singapore jail. However, his story took an unexpected turn when he emerged from his troubled past to become the CEO of the Irish football club Galway United. In 1993, Tepper teamed up with Jack Walton to start their own thing, Appaloosa Management LP. Now, here's where it gets interesting. While many traders were making money by betting against the market during the 2008 financial crisis, Tepper did the opposite. He saw an opportunity and invested big in struggling banks like Bank of America and Citibank, knowing the U.S. government would step in to save them. This move turned out to be pure genius, making Appaloosa Management a cool $7 billion profit during the crisis. What makes Tepper stand out is his knack for distressed debt investing. That's a fancy term for buying the debt of struggling companies on the cheap and making a killing when those companies bounce back. According to Forbes, David Tepper's got a net worth of a whopping $18.5 billion. That's like having a treasure chest of success in the world of trading. From making millions during financial crises to building fortunes with unique investment strategies, these individuals have left an indelible mark on the world of finance. If you enjoyed this video, don't forget to hit the like button, subscribe for more fascinating content, and share your thoughts in the comments below. Until next time, happy investing!